What's going on, everybody? Lamont here from the Chart Guys. In this video, we will go over how the market continues to remain resilient. Buyers, at least, continue to remain resilient. We'll go over some of the old trade zones, update you on some new trade zones, and then also talk a little bit about what the market needs to see in order to continue to have confidence in staying resilient. So let's get into it. Okay, so starting off with SPY. If you'll recall, last week we were discussing how the buyers held the line and they stayed in solid defensive posture despite breaking down and leaving this overhead supply. They were still holding over backtest of the local prior supply, now acting as demand. And they've pretty much built on that, right? So here we had another constructive week for the buyers. And very, very notable, right? I think this week, how price responded to the key levels in this prior all-time high supply throughout all four of last week's sessions were pretty affirming for this type of analysis, volume profile analysis, because if you'll recall, this was the key all-time high supply, and so the gap up open on Monday was pretty much right over the value area high of the structure. So the buyers were positioned very well to continue to build value higher relative to the all-time high supply, which would have been the best case scenario. So that would have been just to hold over the value area high 599.29. Now, they failed to do that on Monday, with the opening drive being lower, or rather with sellers controlling the majority of the session, taking prices lower. But you'll also notice that the sellers failed to find acceptance under the value area low of the structure at 595.57. So the objective for the sellers after the buyers held over the open here, opened up over the value area high here, was to take price under the point of control of the prior all-time high structure, which then would affirm this structure as supply, and then find acceptance under the value area low of the structure in order to build value lower relative to it. And so they got their first objective done, but they failed at their secondary objective. And so the next day, on Wednesday, you have this open here, which is pretty much smack dab between the point of control and the value area high of the structure. And so the question becomes, all right, well, if the sellers do touch down on the point of control, can they find acceptance under it again? And can they crack under the value area low? And of course, on Tuesday, you saw just a drop and pop there, a very, very slight break of the point of control, and then break to a new all-time high, and you close pretty much near the highs of the day. It looked really good for the buyers. The buyers were positioned well for continuation, and they start off the next day pretty much where they closed. Again, sellers control the session, but another drop and pop at the point of control. So now the sellers in these two sessions are showing you that they're relatively weaker relative to this session where they were able to come all the way down to the other side of value. And so these two drop and pops at the point of control, essentially buyers building on what they got done over here. The buyers played defense here by preventing sellers from finding acceptance under the value area low of the structure. And then over here, they're being even more constructive, saying, you know what, we're not even going to let you get down to the value area low. And then on Friday's open, again, very notable to open over the value area high of the structure. And then you'll notice the low of the day misses to touching down on the value area high, right? And so, well, again, what is the objective here, right? For these sellers, if you're going to open above the structure's value area high, their first objective then got to get under the value area high, then get under the point of control in order to affirm that structure as supply instead of demand, right? And so again, a very notable failure, increasing the potential that if we were to come test the highs, that these buyers would look to press the issue, which they have. And so these buyers, again, very resilient. They held the line here and they're back on offense. If you recall, last week we were saying, okay, well, in order for them to get back on offense, what they needed to do was to find acceptance over the point of control, which, this was clearly that happening. And so going forward, it continues to be the same, right? As long as these buyers can continue to hold over 598.16, then they're going to stay positioned well to continue to press their advance. That is pretty much it for the SPY. I don't think we updated any trade zones, right? Nope, just this one from old. And I still really wouldn't adjust this, right? Because let's say we don't see follow through over here, and then we come back down into this range, something like this, like a drop and pop here, and then fall back into this range. All right, then that would essentially be a look above and fail. These sellers should be trying to come down and test the lows of this sideways structure, which would still be constructive as long as they can hold over this guy. So I wouldn't update this quite yet unless we can see some more follow through over this guy, and then we can play off of this structure. If you were to play now a little bit more aggressively, you'd pretty much just be using this local area of demand and then also in conjunction with this fella. So just kind of like how we walk this up, it's the same idea. Like if you wanted to be aggressive here, you'd be doing something like this, right? Looking for a move back down to test this area of demand. And as long as we hold over the point of control of this structure at 582.46, then we're probably just looking at sideways trade above, which would be constructive as long as we're above this guy. Okay, so I don't have as much confidence in this zone as I did the original zone, but this is still very reasonable. Hourly oversold conditions into this area, very reasonable trade zone setup. Okay. All right, so moving on to the Qs here. So for QQQ, a little bit of relative weakness here, but it's a very rotational market right now, right? If you look at XLF, it's still ripping to new highs, right? For XLV, despite the fact, so those are our three major sectors, despite the fact that we're kind of far off of the highs right now, like 7% off the highs, we're still holding over all of this big structure, right? And like in general, the sectors just don't really seem to be in bad shape, right? So hang on a second here. So finance at highs, discretionary at highs, communications at highs, XLI at highs, XLP at the highs, XLE, at the highs, right? This is not all-time high, but near local highs, even utilities, ripping, materials, and then real estate's kind of a laggard here. So if anything, like real estate and energy, a couple of laggards here, but they don't really make up much of the S&P. I don't think more than 10%. I doubt it. I'm not 100% sure. I haven't updated that in a while, but I mean, I haven't looked at the update in a while, but historically, they don't really amount to more than 10%. So, very rotational market with many of the sectors, pressing at all-time high or near their highs. So as long as that's the case, I don't really think that this relative weakness in the Qs is that big of a deal, right? Because it could just be waiting, and if you look at the Fangman T names, all the Fangman T names are also positioned quite well. Hang on a second here. Let's see here. All right, all the Fangman T names. If you zoom out and you look, let's be in a different chart for that. Hang on. All right, so if we look at these Fangman T names on like weekly charts, right? So this looks totally fine with NVDA consolidating over the highs of this much larger area of demand. Apple, again, just consolidating over a much larger area of demand, pressing to the highs. Microsoft, despite this pop and drop over here, still just consolidating over this tiny guy, which is kind of just sitting on top of this much larger guy. Meta is the same deal, right? Consolidating over a much larger area of demand. Netflix, a lot of space, even to backtest this area of demand. Google, consolidating over this much larger area of demand. It's kind of like these two structures here. And then Amazon is the same dealio, right? So it looks very rotational to me. I don't really see any red flags for this market. The fear and greed index, let's take a look. It's probably just still hanging out in greed somewhere. And it's starting to get into the extreme greed zone, but as of right now, I still just don't really see too many red flags. I don't really see much reason to be, an aggressive seller. So that's pretty much it. And so for the Qs here, it's really just a battle between this all-time high and supply and then this area of local demand. You can see how you have multiple drop and pops at the highs of this local demand, which is roughly the same as the high of this prior all-time high structure here. And so as long as you're finding acceptance over 503.51, well, then obviously this prior all-time high structure, which was clearly acting as supply here and throughout all of this, and is now flipped into demand, these buyers are positioned well, right, to continue to press their advance if they can just get over this guy. So pretty much where SPY was last week, QQQ is still kind of hanging out there. The buyers have played solid defense off of local daily demand and the prior all-time high, but in order for them to press the advance and press the new highs, they have to start affirming this all-time high supply as demand by finding acceptance over 513.24. Okay, so new daily higher low supports at 501.93, and again, if higher highs next week, really all about 513.24. I don't think we had an updated trade zone. That was a miss. Just this guy. So I would just continue to operate off of this guy for the same reason that I was talking about with SPY, right? Like there's no guarantees that these buyers are going to hold over this fella and then crack over this guy. And if you did have extension back into this area, this is a solid amount of demand that was created here. I would not be surprised if these buyers were to play some defense off of this area, even if ultimately, if we do lower low and see some more significant selling, I would still expect there to be at least some defense here. Okay, so that's pretty much it for the Qs. And then moving on to the rut here. So the rut, you know, again, still showing you some relative weakness, but I do still think that, you know, if the market can stay strong, if inflation continues to be more or less, the rate of inflation continues to be more or less chill, and we continue to get rate cuts, I still think the small caps would benefit significantly from that. You know, that's been my thesis, my running thesis for most of the year. That's why I built that IWM position over the year using, you know, a bunch of these shared trade zones, right, of old. Oh, these fellas over here, no, those were the sells, but we had some more in here that I guess I have removed. I don't know. Either way, it's why we were looking for the buys off of this. You know what? It's probably on the other chart here. Or not. Oh yeah, it was. It is. These buys, right? This is the same reason we were looking for these buys is for that thesis. So anyway, my point is just that I still think that there's decent odds that these buyers are trying to play catch up in the small caps. And I really wouldn't adjust this still though, right? Because again, for the same reason as the SPY and the QQQ, if you're gonna higher high here and not see follow through and then re-enter this essentially continue to trade above this guy, continuing to trade above this guy would still be constructive. So I would just continue to use this. If you get extension into this area, very reasonable place to be looking for buys. And that's pretty much it. So daily higher low has been set here at 239.43, but no break to a new high here. So there is the potential that a lower high is being set here at 243.69. If next week the sellers can break 241.54, and these lows are pretty close to each other, right? Each three of these daily lows, like if you think about the late time buyers, like later buyers, laggard buyers who are seeing this move and they're trying to capture a higher low, you probably have stops here, here, and here. And so if you do happen to clear these stops out, they probably trigger these stops and these stops as well. And if they don't, then that's also good information for us, right? That would be, weak selling. So that's pretty much it for the run. All right, best case scenario for these buyers going on next week is just to hold over 239.19, because holding over 239.19 would essentially affirms this guy as demand, and this guy is the all-time high supply, from 2021. So that is that's really it. Moving on then to the Dow. All right, so I don't think we updated a trade zone here as well. I think we just were sticking with this guy. So I still continuing to maintain that that's where I would be most interested with the Dow. So let's do the analysis first, right? So obviously holding over this prior all-time high supply, holding over the back test of it, incomplete gap fill, is all very bullish, right? Like these are all notable failures on the seller's part. So they didn't fill the gap. They couldn't find acceptance under the prior all-time high, 433.20, and they broke to a new all-time high, left another unfilled gap behind. But, again, like if you were to see some significant selling, there's really a lot more volume traded at this like 421 level than anywhere else. So I would just continue to use this trade zone personally. At this point, though, honestly, this is a lot of extension coming down into here, so I would be more comfortable than I was over here. I mean, looking for plays off of this structure if we do have hourly overbought conditions coming into this area. So essentially it would be like just moving this guy to like here, right? I don't like it as much as this area. There's still a lot more value established here. But, if you're an aggressive buyer, I think this is pretty reasonable. You probably want to do your targeting like based off of a back test of this prior high. So something like that. I think that's pretty reasonable. So I don't really consider this much of a daily pullback. I wouldn't consider that to be a higher low. I would say anything over 429.64, I'd consider that good for a daily higher low. So that's pretty much it for the Dow. Everything looks fine as well on the Dow. Moving on to the dollar. So the dollar, if you recall what we were discussing, what we have been discussing for a long time now, is whether or not the dollar can hold over. Wait, is this the right? Yes. Whether or not the dollar can hold over this guy, right? Like this is pretty much the best case scenario for dollar buyers would be for them to hold over this guy. Now, so far, they are not really doing a good job of that. But what they are doing thus far is holding over this guy, right? So this fellow over here, which is what was essentially problematic for buyers here and problematic for buyers over here. You know, essentially, if you don't trade under this guy, then you don't come into this big structure over here. If you don't come into this big structure over here, then you're going to stay positioned well to keep having a go at this key all-time highs, key supply over here. So despite the fact that you're not finding acceptance over 106.335, which would be the best case scenario, as long as you're holding over this fella, you know, you're staying positioned well to have another go at finding acceptance over 106.335. So again, like I would be way more conservative with anything. Like if you took this play down here, I would be really conservative looking to add back in. I would wait for some further extension, because if you do find acceptance back under 106.335, under 105.720, particularly the latter, then the odds of us coming back down to test the lows of this range again are pretty good, right? Every single time you reject from here, test this guy, reject from here, test this guy, reject from here, test this guy. So is this a pop and drop here? We don't know, but if we continue to find acceptance under the point of control of this structure and this structure, that would increase the probability that we're going to just continue to stay within this balance. So at this point, I wouldn't be too interested in a sell either. Like I would prefer to see a drive lower, and then such that if we were to come back down, come back up into this area, you'd have hourly overbought conditions, and then I think it would be more reasonable to hit a sell. So personally, this is just kind of a wait and see environment for me. If you are insist on looking for the buy, I would prefer to be looking for the buy in here where this local demand was created. This is for like the, you know, most meaningful area of demand was established on the way up of this, you know, more or less one-way trade. It was mostly one-way trade. Okay, so that's pretty much it. Daily trend is, we lost the higher lows, but technically don't have a lower, I guess technically there's a lower high into a lower low. So you could say that the trend is broken, the daily uptrend is broken, and what I really care about is, will they hold over this guy? Space for a lower high under 107.470. Anything under that is going to be good for a lower high. Moving on to NVDA. So NVDA, you know, break with no follow through, definitely not great. But again, this is a much larger area of balance that's just holding over this area of demand. So as long as that's the case, this consolidation is still very healthy. Now, again, we have to be very concerned, not very concerned, but we have to be aware of the potential that this is a look above and fail. And if you do get a look above and fail, then the sellers should be trying to come test the lows of the range. So I continue to maintain aggressive buyers. If you want to be in here, I think that's fine. But I would much prefer if we would come down here. So again, if you look at those Bangman T stocks, like what are they doing right now? They're all in these larger weekly holding patterns, right? And many times in those larger weekly holding patterns, you'll get multiple backtests of prior areas of demand, right? Where for Microsoft, not really great examples here. I guess like these two tests of this area of demand for Meta. So these multiple tests of this area, right? This guy over here, a backtest of this fella. Honestly, not the best example either. Let's see. So these three lows, pretty much a backtest of this area of demand, or these peaks, pretty much a backtest of this supply. And Amazon, honestly, not a great example from a buy side for Amazon, but for the sell side, certainly these three peaks are just a backtest of this supply. So my point is just that, you know, this is regular market activity. Like you could very regularly see multiple tests of a specific area, and as long as that area is holding, then bigger picture, it is still constructive. So I would prefer to see extension, like ideally on the daily time frame, back down into this guy. I think that would be a much juicier setup. Essentially, just looking for responsive trade, very similar to, you know, like the dollar play, right? So essentially, you know, what were these, like, I guess the dollar is a better example, many tests of this key area, right? So the same reason why we were interested here is the same reason why I in my opinion, this is a, you know, a early pattern recognition, right? Like if this is going to fail here, the odds of us coming back down here are pretty good, or rather, at least we can be pretty confident that's what the sellers want to do. We don't know that it'll happen, but if it does happen with extension, I think very reasonable to be down here. Okay, so, you know, pick your poison, essentially, right? Aggressive buyers, I still think this is very reasonable if you have hourly extension. I probably would be a little bit more conservative with the profit taking, right? Just look to get back to this prior all-time high area, 140.76. And I would not be surprised if even if this trade were to work over here, if we were to lower low and come test this area again, I would not be surprised by that at all. All right, so moving on to Bitcoin here. So Bitcoin, still super constructive, right? Like you have this local area of demand over here, you come back down, test the value area high of the structure, and then bounce all the way to the all-time high supply. I think I have it drawn up on the 4-hour time frame right now. I do. So, you know, I still think this chart is totally healthy, right? Like even if Bitcoin were to retrace all the way back down to 73,000, obviously that wouldn't be great, right? That would be like a 25% decline or so, right? But that still would be fine, bigger picture, right? Like this is a huge amount of demand that was essentially established just above the prior all-time high, right? So as long as you're holding over this guy, then bigger picture, this trend is fine, right? This trend that began down here, sideways breakout, sideways breakout, sideways breakout, sideways breakout, sideways breakout, sideways breakout. It's fine, right? This trend is totally fine as long as you're holding over this guy. So again, I continue to maintain I would much prefer trade down here, right? Like even if this is a 25% decline, it's not my first rodeo, like especially when it comes to crypto. Like that's nothing. Like a 25% decline in crypto is, it's nothing. This is a 50% decline, for example, right? I would be very interested if we can get like daily oversold conditions, which I believe would be if we were yeah, we would be daily oversold, which hasn't been the case since back here in this forever balance. So you give me daily oversold conditions into backtesting this very large area of demand, I will be a player here. Okay. So anyway, at this point now, however, this trend is totally fine as long as we're holding over 89541.25, because then that would just continue to affirm this local daily demand as demand. Okay. So that is really it. And I honestly wouldn't be surprised if they don't come down here. Like if this selling comes down here and then let's say they flatten out somewhere within this one-way trade, right? Okay, fine. Then the next time that we come back down here, if we get extension, I'll be interested in buying that move back over this low, something like that. But for now, because this is all the data that we have right now, so we can't really be confident that there's going to be a low set in here somewhere. But if I had to guess, it'd either be here or here, just because that's where there's just this slight overlap, particularly these 4 sessions or so. That's what I'm looking out for. Okay, so that's pretty much it for Bitcoin. Again, there's really no red flags for Bitcoin right now. Ethereum. So Ethereum seeing some laggard action. Did not come into our trade zone. I still would continue to just use this as the trade zone though, because I mean, this is just a whole lot of balance that was created before. I still acting as supply, and this is really the key test here, right? This guy, you could look at this as one big block, but this guy sitting at the low of this one big block is pretty much what was a diving board over here before sending it way, way lower. Like if you drop a low array at the low of this structure, right, it's pretty much where they failed over here, So and then you come back and revisit that after 3 years, and it's clearly problematic for buyers here and problematic for buyers over here. So this is a good amount of supply. Now, I don't think there's any reason to be bearish, in this space right now. So that being said, this is just a big area of balance, and this is the key structure. And so even if they were to decline, let's see, this is like 30% or so. No, it's another 25% decline. I would still be most interested there, right? Give me daily extension into the backtest of this much larger area of demand. This is like 5 months of demand that was established, like just like this was a very reasonable sell, which I think we did set up, right? I think we set up a sell there. Yes, we did, right? Just like these were very reasonable sells looking to get back down to the low of the range. This is a reasonable buy area. Simple as that. Okay, so that's pretty much it. Daily trend. This daily chart is totally fine as long as they can hold over a back test of this local area of demand, which has been the case, right? This is just sideways breakout, sideways breakout, sideways breakout. So no reason for these sellers, for these buyers to be concerned right now. And that is really it for Ethereum. I really wouldn't update this either, but then also you have to consider how I trade crypto. It's not really, I'm not very active. It's really a position trade kind of a dealio for me where I'll come in tranches, buying weakness, and then as things rip, I just look to peel it out very often, especially for these altcoins. I will only leave profit in, and then I just leave those free rollers on. I've posted a bunch of those trades in our crypto rooms, because we can't figure out how to get data for this room. Anyway, crypto data, I mean. Anyway, so that's pretty much it. And then finally for CCJ here. So for CCJ, again, this chart looks totally fine. This was the trade zone shared a few weeks ago. Was this when I was traveling? October 21st? I think I was traveling. Okay, so this is the all-time high structure, right? So this 2007 structure from all the way back here, that's the all-time high structure, right? That we're using as a reference. And that's why this trade zone was developed off of that, right? Because as long as these bars are holding over that prior all-time high structure, well, then obviously higher prices relative to the prior all-time high structure are being accepted, and that's the best case scenario. So the best case scenario is continuing to shake out for these buyers, right? Daily higher low has now been set here at 57.11. Again, just no red flags. I don't know that I would update this, right? Like very often when like you break to new all-time highs and you're finding acceptance over the prior all-time high structure, very often it gets retested again. You know, like just look at Bitcoin, for example, right? Bitcoin's all-time high structure was this guy. You break over it, test it, break over it, test it, break over it, test it, right? Lower low, no follow through, break over, test it again, etc. over and over again until finally you break out over the new all-time high structure. You know, so again, this is why I'm more interested in waiting for a potential trade over here. I don't know that it'll happen, but I would be most interested over there, right? We don't get to know what's going to happen. We only know what we'll do if something does happen. So that is really it. I would just continue to use this guy. I wouldn't even update it, because if you higher high here, no follow through, and we just continue to trade sideways, that would be healthy as long as we're trading sideways over the prior all-time high structure. So that's it. Appreciate you guys tuning in. I think our Black Friday sale is still going on, so I'm honestly not sure. But if you're interested in that, joining community, thousands traders or so, many of us are full-timers, professionals. Links in the description below. And also, I think the Black Friday sale includes like a proprietary indicator, super stack indicator. It's a pretty solid indicator, honestly. I'm not really an indicator guy, but you know, I think it's a pretty solid one. Obviously I'm biased, but I do think it's worth checking it out. And that's pretty much it. So if you got anything out of this video, we would very much appreciate like and subscribe. Costs you nothing, helps us out a bunch. And otherwise, I appreciate you guys sharing some of your time and energy with me, and I hope to see y'all next week. Farewell.